Hello, I'm Randy Alsman. I'm a Portfolio Manager here at Donaldson Capital Management and a member of the Investment Policy Committee. I'm continuing our process of answering questions from some of our readers and listeners. Great question came in the other day about economists that are offering opinions on the future of the U.S. economy and on various aspects of industry and investing. The question was, how can the opinions of so many bright people be so far apart? Where is reality? Who do you listen to other than yourself? Of course, economists are famous for having varying opinions that led to Harry Truman's joke about always wanting to meet a one-handed economist because they would come into him and say, this is what's going to happen with the economy, but on the other hand, this could happen. Economies are incredibly complicated sets of factors. In fact, they are the results of billions of different decisions by individuals and actions by individuals and companies and governments. Therefore, predicting the future course of economies is equally or maybe even more so complicated. I would compare it to predicting the ultimate path of a hurricane 3 weeks in advance. There's this cone of probability that gets wider and wider as you get farther and farther out for hurricanes. It's sort of the same thing with economies. And since those billions of decisions and actions are all taken by individuals, and human beings can do unpredictable things at times, and they'll sometimes behave according to past trends and patterns, and sometimes they'll act completely out of character. That further exaggerates the unpredictability at times of economies. So how can they have different opinions? Well, as the reader says, these are very bright people. And there are billions of pieces of economic data that you can select from to construct a hypothesis or defend a theory about the future course of the economy. And the smarter you are, the more skilled you can be at crafting the opinions, the hypothesis, or selecting the data that goes into it. And also being human, economists are subject to the same kinds of conscious and unconscious biases that the rest of us are. If you have a point of view, it's been shown many, many times that your subconscious will guide you toward things that support that point of view as opposed to being completely objective and broadly inquisitive. Of course, the more self-aware one is, the more self-aware an economist is, any of us are, of our own beliefs and prejudices and biases, and the more we consciously and actively work to be objective and bring in contrary points of view and try to genuinely weigh those, the more effective our work can be, and often the more valuable our opinions or predictions can be. Again, the same thing holds true when we listen to economists. There are many economists out there who have been in the public eye for years and have a track record. That track record could be one of revealing their sort of underlying beliefs and biases. There can also be a track record of accuracy and performance. We like to listen to economists who are less interested in their public persona, that don't speak to be heard, but speak when spoken to or a question asked of. And often these are economists that do publish their opinions in a written form, much more so than on the visual or audio media. And often they do it under contract. We listen to people who also quote statistics and data in supporting their opinions. And it's important to do this. If someone says, well, I believe this just because, you wouldn't give nearly as much weight to that opinion than if they said, we believe this is where the economy is going to go because this piece of data, this piece of data, this piece of data all suggest that. In the past, we've seen that when these three act together, there's a very high probability that this is the direction things are going to head. So we try to select people that are not on record as having strong prejudices or biases. Paul Krugman comes to mind as an example of someone with a very strong bias or prejudice, but also a very, very bright person, a Nobel Prize winner, in fact. And we like to listen to people who have data that support their points of view and point to that. We do pay attention to track record, how often have they been right, but also we pay a lot of attention to whether they own up to being wrong. It's just as important for them to be humble and objective and courageous enough to say, I was wrong about this. That lets us know they may be much more objective in their view of the future and a little bit more careful in the depth and breadth of the research they do to support future opinions. So it's easy for incredibly bright people that have a selection of an almost infinite level of data to choose from to construct and support arguments, and that deal with economies or dynamics that are driven by human decision making, which is to some extent over large numbers and longer periods of time that conform to patterns that can be repeated and predicted, therefore, but also that can be very unpredictable. So we like to listen to folks like Ed Yardeni, who publishes a newsletter that we subscribe to. Ed was voted the #1 economist on Wall Street for a number of years in a row prior to starting his Yardeni research business. Bank Credit Analysts is another group of Canadian analysts that we think are especially research-based and have done an effective job in predicting in the past. And there are a number of others that we do listen to. We also try to evaluate our own past decisions. Just like we talk about evaluating economists, we like to look back and say, where have we been wrong, where have we been right, what were the factors that led to each of those, and try to learn as we go along. So it is frustrating to have so many different opinions by people who are so skilled at supporting their points of view and that are able to be persuasive in their comments, but that drives us much more so to looking for the facts that underlie it, to try to understand the potential bias that individual might have, to look at their track record, to see what their humility has been in admitting when they've been wrong in the past. Hopefully that answers a little bit of the question. We did provide the names of some specific people we listen to, but we listen to far more than just those 2 or 3 that I mentioned. But they adhere to the principles that we follow in giving weight to economic opinions as we hear them. If you hear it on some of the more popular talk shows, there's a very good chance that it's being presented as much to be provocative as it is to be guidance. Thank you. I hope to hear more questions from you all and hope you enjoy hearing our thoughts on those.